Hello, Snap members. My name is Dean Gummerson. I'm the owner of AmCheck, and we provide cloud-based payroll HRIS solutions. We've been a Snap sponsor for several years now, and I wanted to share with you some PPP loan forgiveness application tips that's going to help ensure your PPP loan forgiveness request is processed and approved the first time. Now, as a provider of payroll HRIS solutions, all of our clients have access to a PPP loan forgiveness report. This has been provided to them with the exact data needed to complete the application. Several other payroll providers have created similar reporting, so make sure you check with your current payroll provider and see if they have a PPP loan forgiveness report that's going to provide you with the data you need to complete the loan forgiveness app. Since the very beginning, once our clients started requesting and applying for the PPP loan, AmCheck has provided a hands-on approach with our clients. We wanted to help them through the loan forgiveness process, and we did this anywhere from brief phone consultations all the way up to live web meetings now, walking our clients through actual loan forgiveness applications through their bank. In short, we're doing everything in our power to ensure our clients get the maximum amount of forgiveness allowed. Now, as a SNAP member, you have access to this consultation as well. So in this video, I'm going to review some loan application basics. And if you'd like to just schedule a one-on-one meeting with me, please request it through the SNAP conference site. We'd love an opportunity to help you out. Okay, enough of the intro. Let's get started with the example loan application. On the loan application, one of the first things that you need to decide is whether or not you're going to use the covered period or the alternative payroll covered period. If you process your payroll biweekly or weekly, meaning you pay your employees on a specific day each week or every 2 weeks, we strongly recommend to our clients that they choose the alternative payroll covered period. This is going to pick up on the beginning of the first pay period following the loan date. This will allow you to pick up full payrolls and make the reporting much easier. If you choose the covered period above the alternative payroll covered period, you have the option for the covered period. This is a specific period from the loan date, 8 weeks or 24 weeks out. And there's most likely it's going to end up capturing a portion of a payroll, and you'd have to figure out that reporting, and it would make it more difficult. So in most cases, biweekly, weekly, choose the alternative payroll covered period. You need to choose the pay period. The start date is the pay period following the loan date. You cannot choose the pay period prior to the loan date. If you do that, your loan application will probably be rejected. The covered period is for semi-monthly payrolls. So if you're semi-monthly and you pay your employees twice a month on specific dates, then you have to use the covered period. You are not able to use the alternative payroll covered period. And unfortunately, you will need to figure out portions of payroll. So if you had a few days of a payroll fall into your covered period, you're going to have to figure out a percentage of that payroll to include in your reporting. Okay, let's move on to the payroll costs, line 1. What's included in your payroll costs? It's going to be your gross wages, any employer benefits, medical benefits that you covered, any employer retirement contributions that you covered, and any employer state taxes. Those items combined is going to be your total payroll costs during your covered period, during your selected covered period. You can also include mortgage interest payments, rent payments, and utility payments. As an example, let's say this particular client's payroll costs are $200,000. So we have $200,000 of total payroll costs. Now our loan date was on May 5th. May 5th is when the money went into our account. Check with your bank, have them confirm your loan date, because if you send this application with the wrong loan date, it will be rejected. We're biweekly, and because we're biweekly, we're going to choose the alternative payroll covered period. And our payroll period started on May 11th. And it ends on October 25th. That's a 24-week period starting at the first pay period after our loan was funded. We're going to say that we had zero interest. We're renting. Our rent during the 24-week period is $10,000. Our utilities is $5,000. And then moving on to line 5, it's asking us our total salary hourly wage reduction. What this is looking at all of your current employees, looking at what they were paid in the first quarter of 2020, prorated, and then looking at what they were paid during the covered period, your 24 or 8-week covered period. And if their wages were reduced by more than 25%, dollar for dollar beyond the 25%, it's going to reduce your loan amount. So in this example, we're seeing that in most cases, there have not been any wage reductions with any current active employees. We're then asked to add the amounts on lines 1, 2, 3, and 4, then subtract the amount entered in line 5. Line 5, we have 0, and in most cases, that is what we're seeing. So we have $200,000 plus $10,000 plus $5,000. So $215,000. The FTE reduction, hopefully your payroll provider is able to provide you with a report that gives this to you, but there are two separate look-back periods you're able to determine your FTE reduction. Two separate periods. You choose whichever one is the lowest period, lowest numbered period, because it's going to help your FTE reduction number, and you compare that to your covered period. And basically, if you had 10 employees during the look-back period and during the covered period you had 5 employees, then this is going to be 0.5. They're saying your loan forgiveness is going to reduce by 0.5. So a more realistic example, let's say you had 10 employees and during your covered period, your FTE count went down to 9. So this would be a 0.9. Now this 0.9 modifier, notice on line 8, it says multiply line 6 by line 7. Okay, so line 6, we have 215,000. And we multiply that by line 7, and that gives us 193,500. Now, notice that FTE reduction came off of our total payroll cost, not our loan amount. It came off our total payroll costs. So in an example like this, where over 24 weeks we spent $200,000 on payroll, the loan was based on 2.5 months of payroll. So odds are our loan was considerably less than $200,000, maybe like $100,000. Well, that FTE reduction of 0.9 down to 193,500 is not relevant in this scenario because our total payroll costs were considerably higher than our loan amount, which is another reason we're recommending to our clients to use the 24-week period. Every company has a different scenario, but in most cases, we're finding that the 24-week period helps to ensure full forgiveness for most of our clients. So with a loan amount of $100,000, and then we take line 10 calculation, which is saying divide line 1 by 0.60. Don't multiply, and make sure you divide it. I bring that up because we're seeing a lot of clients do this incorrect. And if you do this incorrect and submit it, it might be a huge difference on your loan forgiveness. So we want to take line 1. Again, it's taking the total payroll costs of $200,000, and we're dividing it by 0.6. So that gives us a total of $333,333. Then down here on line 11, we take the lowest amount, which in most cases that we're running with our clients is the loan amount. So that indicates full forgiveness. Even though the FTE count dropped during the 24-week period, because we're looking at the full cost during the 24-week period, we're getting full forgiveness. And this is a big eye-opener for a lot of clients when they go through and run the numbers. Now, there are also safe harbor scenarios where you automatically get a 1 here. But again, we're finding that it's not necessary. In most cases, you're still getting full forgiveness. But you want to make sure and fill this out correct, get it processed as soon as you possibly can. Make sure you have the right alternative payroll covered period dates in or covered period dates in, and ask your payroll company if they have a PPP loan forgiveness report that you can use that will provide you with your payroll costs, and also help you complete the Schedule A of the loan forgiveness application. I think one of the biggest eye openers after completing the loan forgiveness calculation worksheet, which I have found a lot of business owners have not wrapped their heads around yet, is the fact that these FTE reductions and the salary hourly wage reductions are coming off the total amount that you spent, not the loan amount. And when you run the numbers and plug the numbers, what you find is that you're getting full forgiveness as long as you were running some regular payroll. But to get that, a lot of times you do have to use a 24-week period. With that, I hope this was eye-opening for everyone. If you need some additional assistance with the Schedule A form, we can look at some of your payroll reports or a couple other SNAP members where we got into their current payroll system. We found some of the PPP loan reports, and I was able to help them get this application completed. And if you need that help, schedule a one-on-one. Happy to do it. Hope this was helpful to everyone, and hope you're having a great day. Thanks.